Alrighty, folks, we are going to talk about a refi boom and something that I think is coming. Before we get into the brass tacks, we need to do a quick marketing thing to protect us. Stephen, please do that marketing thing so we don't get in trouble.
Thank you, sir. Again, although I work very happily for Velocity Mortgage Capital, all the ideas and topics discussed on this channel are that of my own. So let's get it going.
Alrighty, Stephen. So what I think is about to happen is about $500 million to $1 trillion in home equity is about to be extracted. So I believe we have started a real refinance boom. It is going to start with the whole marry the house, date the rate crowd. The people that had 1 year, 2 year rate buy downs, they got lucky and they're going to refi into permanent debt. That has already started. But what's going to happen over the next 6 to 12 months is people are going to realize that they are sitting on record amounts of home equity.
Mm-hmm.
And if history has proven anything to me, Stephen, when we have equity in our homes, we line up at the ATM machine. So I think we are about to take our 50 trillion plus home equity and go get some cold, hard cash. You've been in the mortgage industry many decades. What do you think's coming?
From your lips to God's ears, yes, that would be fantastic for somebody like myself. But I would agree with you because, again, they've been talking about like record debt as far as credit card, right? Up to this point. So if you got the equity, usually the spin is, hey, why don't you consolidate some of your debt, get a cash or refi to pay off all of that. Now your interest is tax deductible, and now you can prove your credit. But some people don't really stick to the plan. They'll pay it all off and then charge them right back up.
Run it up again.
Right back to square one. So that happens more often than not. But if you're if you're smart and disciplined, this would be a good time. And yeah, when rates dip and property values haven't really dipped as far, because again, with rates dropping, they're probably going to go up a little bit.
Yeah, the demand will increase. Yeah.
And so I agree with you, Mike. I think that we're on the precipice of maybe the next refi boom if rates stay where they're at for a while. Otherwise,
yeah, they got to stay for a while for sure, because we've been here before. They bounce right back, but all of that. This does feel different. We got a rate cutting cycle starting. It certainly feels different.
Yeah.
But yeah, I think it's going to be really wild to watch because, again, there's always thoughts about the economy. Like you said, record credit card debt. It's funny, in the next 6 months, I mean, theoretically, that could be cut in half, right? Because, again, if you happen to be one of those credit card holders at 30%, right, 32% or whatever the credit card rates are now, you go get a 6% cash out refi or an 8% second, depending on what the right option is for you.
Right.
You pay that off. You take a deep breath. Life's better, right?
I mean, there's nothing like the freedom of being debt free. I've had that, a couple times in my life, and yeah, there's nothing like being stress free. You know what I mean? Like all the materialistic stuff that you buy with your money, it's short lived. It's very shallow. But to have peace of mind, that's invaluable. Where you don't have to worry about, I didn't make enough money. I gotta. It's just freedom.
Yeah. So it's really funny when you think about this $1 trillion, which would be about 2% of the home equity. So again, $1 trillion sounds like a lot, but it's only 2% of current home equity. If that comes out in the next 6 to 12 months, we could see credit cards go down. That would be a net positive.
Yes, definitely.
We could see people raise their cash savings. That would be a net positive. We could also see stupid behavior. I think there would be plenty of consumers that go, "Yay, free money!
Free money, yeah! I'm gonna go buy.
We're gonna buy a third car, do a stupid vacation or whatnot." Right? Consumers are consumers.
Well, I mean, the loan business has been around for decades for a reason. People sometimes, make the wrong move just impulsively, and So, hoping that this time around people have kind of learned their lesson, especially if you've been in the market for a couple of years and you've had all the ups and downs, and hopefully you've learned from your mistakes like I have in the past. I think I mean, I can only speak for myself, but I've made a lot of different changes this time around, buying my house again and in this kind of environment. Very conservative about everything. Before, oh my God, it was like, it's raining money, it's gonna be like this forever, and nope. So I've learned very, very, very well how not to go about things, and so now I'm sitting at a really good place. I'm almost debt free, other than my house, really. I mean, I did splurge for a new car, but I never mentioned that to you yet. But yeah,
shame on you.
I don't want to tell you how much, and I don't even want to tell you.
We'll talk off record. We'll talk off air.
Yeah. But I mean, it just gives me motivation to work, 20 hours a day, 6 days a week, because usually, like, I work from home, and I don't really like see what the fruits of
Yeah.
my labor. But now when I ever drive this car, I'm like, oh,
I feel
now I know
better.
why I
All
work
right. Well,
so
good for
hard.
you. I just picked up a new car, so we'll compare.
Oh,
We'll compare
gee.
off
Okay, yeah,
air. Yeah. Yeah.
offline. We'll see.
There you go. But it's really interesting because again, I think we're about to see a refi boom. Again, rate and term is going to happen. That's already happening. I'm hearing. But I do
Crossing the
think this
fingers.
cash out's going to happen. And the last variable is going to be there'll be some people like myself who will actually use that capital to invest, right? Because if you can
Yeah.
borrow at 5.5,
Yep.
that's a lot easier to beat than borrowing at 8 or 8.5.
Oh, yeah. Then you get
So
cash
there's going to
flow
be people
now,
like,
possibly.
yeah,
Yeah.
exactly. So there,
Yeah.
I mean, I've been pretty honest with my audience, right? I have a bunch of assets that I own free and clear.
Yep.
And you know what? There's a good chance I go slap a 50% LTV on them. They'll still cash flow fine.
Sure.
But then I got, multiple
Just
six
not on those
figures.
two that we did at 399 and
No, we're gonna leave
right. You're
those
not
alone.
touching those ones.
No,
Yeah.
I'm touching those. 399 staying for good.
I shouldn't even bring that number up because people go, I'm
Yeah,
like, hey,
yeah,
Steve, I just heard you say something. That was like 5 years ago.
yeah. It's right.
Yeah,
It's a long
Michael
time
Smart
ago,
took
but it did
advantage of
happen.
that situation. Yeah.
But yeah, it's there are going to be people like me who are very conservative,
Mm-hmm.
who are sitting at 30 or 40% LTV. We're
Yep.
going to go get 20%, so we won't
Yep.
go above 60.
Right.
But that'll be a big pile of cash, and you're going to see guys like me go shopping.
No, it
It's going to
happened
happen
before when
also.
rates took a
Yeah,
dip. You know what I mean? But again, they just gotta stick around for a
you
little
got to
bit.
stick around for a
Right.
while.
Otherwise, yeah, it'll be short-lived. But man, I'm hoping that it does because again, the current environment kind of leads you to believe that that's going to be a little sticky.
It's different.
It's
It's
going to stick a
different
little
this
bit
time.
because of all
Yeah.
the financial optics and numbers out there. So I think yeah, I would have to agree with you, man. And part of it's like hoping, and the other part is like
Yeah,
I can see the
that's
numbers
fair.
and I can almost guesstimate that that's
But
probably
but
going to be the
but
case.
at the end of the day,
Mm-hmm.
I think what is certain, and we can argue whether it started or not. I think that's a fair debate.
Right.
Is consumers will act like consumers. And right now, they are sitting on 50 trillion plus of home equity. And if rates get low enough, and I think rates below 6 is low
Yep.
enough,
Yep.
you are about to see a line out the door at the ATM machine called the
Well,
home.
I was already seeing a lot of requests for like HELOCs and
Yes,
HELOANs
exactly.
and things of that
Yeah.
nature. But now, if the rates are going to be low enough, they might just refinance that first, and it's even a better deal for them. So,
Yeah, it
yeah,
can be.
and they can qualify easier too than that of a
True.
HELOC. So, I feel that as well, Mike. I'm just hoping that people.
Please
Well,
be smart. Please be
yeah,
smart. Please be smart.
that's all.
Yeah.
Just be
Yeah.
smart.
And the other thing I think you brought it up that's a good idea is it's not there's two ways you can go get this equity,
Mm-hmm.
right? You can go get a second or home equity line, or you can
Mm-hmm.
refi the first.
Mm-hmm.
Please work with a professional who's going
Right.
to do the math and
Correct.
tell you which is better for you.
Right. Because some people are like, oh yeah, I should get a second and it's easier. But in reality, the overall payment, right, is
Yeah,
what
you
it
watch
comes
that.
down to. Don't look at just, it's a low loan amount. So you just got to crunch the
Do
numbers.
the
Just
math.
Here's the math problem. That's all it is. Yeah. It's just
Do the
the
math.
numbers don't lie.
Yeah. Folks, if you're somebody wanted to reach out to you, see what's what, see how Velocity can help them, what do they do, Stephen?
Email's the best. As you can see below, sdow@velocitymortgage.com. In the subject line, please put the acronym ORAAT, which stands for one rent all the time. Easier to find as far as those emails, because I get in a short period of time anywhere from 300 to 400 emails. So problems to have, man. You know what I mean? I'm not
busy.
I'm not complaining, trust me. But it's just sometimes those emails get lost in the shuffle. So it's easier for me to find. I usually in the morning, type in search ORAT, all the emails pop up. I'll try to go through as many as I can in the morning, and then halfway through the afternoon do the same thing, and then in the evening do the same thing. So, because otherwise, like I said, sometimes 340 emails, your email gets stuck in there. I might not be able to see the email for like, a couple hours. So other than that, body of the email, brief description, what you're looking for, address would be super helpful to make sure I lend there. Your mid-FICO score, phone number, best phone number to reach you at, and typically 48 hours, I'll be in touch.
Thank you, buddy. Take care.
Thanks, Mike. Have a good weekend.